The U.S. auto industry is headed for its worst August in 28 years. Ford reported car sales that were down 10.7%. But one U.S. automaker is driving forward. Chrysler's car sales are up 21%. John Casesa has been an industry analyst for 25 years and is ranked as an all-star analyst 11 times by the Institutional Investor. He's now the managing partner of Casesa Company and advisor to the global auto industry. John, welcome back to Bloomberg News. Always good to have you.
Nice to be here, Mark.
Those numbers that I just mentioned, any surprises there?
No, we've been expecting a not very good month. It is sluggish in the automobile business as it is in the whole economy. And, cars are bought because people have jobs, they have growing incomes, and they're confident enough to make a big ticket purchase. And right now, none of those conditions are present.
This is a psychology that is not just in the marketplace, but is in the country as well?
Very much so. I think consumer confidence, business confidence is all tied together. The August results are very sluggish. They're up a lot. Versus terrible results in 2009.
But that could be a little bit misleading, right?
It is misleading. Doesn't mean anything. 2009, the world stopped. So we're seeing some improvement, but we still have a very difficult environment for the consumer.
And that difficult environment to continue on into September, more sluggish sales numbers?
Well, I think so. It's very much dependent on the consumer confidence numbers. If there's a positive side to this, the industry itself has gotten its act together. Through this crisis, it has greatly reduced its cost structure. Most companies are making money at this low level of demand. So they're getting by, but it doesn't make you feel good that we're only selling at a rate of 11 million cars a year.
How much did cash for clunkers help?
Well, last year it helped a lot. Last August, sales ran at a 14 million unit annual rate. The month before, they were running at a 9 million unit annual rate. So we pulled a lot of people ahead with that program.
When you say that the auto industry is getting its act together, give me some examples. Where do you see that?
Well, I think there are two good examples. Capacity is down a great deal, not only at companies like General Motors, but at parts suppliers that make seats and that make axles and that make brakes. That means that these companies can make money at a lower level of volume. Secondly, the quality of the product is improving terrifically. Most parts are designed to last 200,000 miles now. And one of the reasons why car sales have been able to stay sluggish is cars last longer. 15, 16 years before they go to the junkyard. So I think these companies are much more competitive and much leaner. They just don't have demand right now.
At this point, it seems that even after everything we've gone through, that the auto industry got it, that even in these tough economic times, Americans will buy a car if they know that they're getting quality for their money, which they don't easily give away right now.
I think that's true. I think consumers are very discriminating. They have a lot of good choices right now. But for the most part, they're saying, I'll wait if I can wait, if my car's still running okay.
Talk to us about what you consider to be the big themes ahead for the auto industry. What does the auto industry face? Any headwinds going forward?
Well, there are always headwinds. It's very competitive. There's a great deal of regulation. For example, fuel economy standards are rising, emission standards are rising. It costs a lot of money to meet those regulations. But I'd say the two big major changes are the advent of sort of the green car. Because of a societal change and all this regulation, we're seeing hybrids and electric cars, and that may change dramatically how people think about the car and who competes for the consumer.
But that's, you know what, that's interesting you bring that up, because if you have the electric cars, the one criticism, at least that I've heard, is where do you plug it in? Are there enough substations for people? If you're driving several miles along the highway, of course you'll see a lot of gas stations, but where are you going to plug in your car?
It'll be a long time. I think right now the electric car is a niche product in the right markets. Europe is a good place. Gas prices are high, cities are crowded. But I guess what I'd say is there is a societal change and a regulatory push to make cars cleaner, and that means higher fuel economy or electrics or hybrids, and that costs money. The other big change is the rise of China. Chinese market is already 50% bigger than the U.S. market. 5 years ago, it was half our size.
What happened?
Well, the Chinese, a middle class developed in China. And so there are all of these first-time buyers that are driving this market, and that is creating big companies in China, companies that people in the U.S. have never heard of, Geely and BYD, and someday they'll be competitors in the U.S.
I know this is a little bit off the beaten path, but in your opinion, where did that Chinese middle class come from?
Well, I just think it was the China joining the WTO, liberalization of economic policies, and people moving from the country to the city to take factory jobs. Once they started to make money, they wanted to spend it.
Let's stay overseas and let's talk about Japan for a second if we could. We see Japan vehicle sales rising the most since 1972. Toyota and Honda leading the biggest increase in Japan's monthly auto sales in 38 years. What's going on over there?
Well, unfortunately
does that surprise you?
Not so much. The Japanese government has had an incentive program to get people to replace old cars with new ones. The Japanese economy, the Japanese auto market has been dormant for a decade or more. And the Japanese companies, even though they are world leaders, Honda, Toyota, Nissan, are suffering greatly from a lack of growth at home and suffering also because the Koreans, Hyundai, Kia, have caught up.
You know what? A lot of people don't tend to realize that Korea in this equation could in fact be the sleeping giant here. Well,
Hyundai is the next Toyota, and they're almost there in terms of quality, product line, and even size. So that has happened, and they are on the way to being, one of the biggest companies in the world. And they did it in 20 years. Took the Japanese 40 years. Chinese will probably do it in 10 years.
John, final 30 seconds. The U.S. auto industry, as we go forward through the end of this year into next year, kind of strange to realize it's already September 1st. I don't know when that happened. But as we talk from September through the end of the year, what does the auto industry here in the U.S. look like? Well,
I think very moderate recovery, probably more incentive activity to get consumers in the showrooms. And unlike the first few quarters where production was up a lot year over year, and therefore earnings, in the fourth quarter, production's not going to go up. These companies are sort of feeling a plateau right now.
But what about the need, as you know, at this time during the year, these auto companies, the dealers in particular, they want to get the cars out of the showrooms because they want to get next year's models in. A good time for people to get into the showroom and buy a car?
Well, generally speaking, yes, because business is not great, but there's not a lot of excess inventory. The best deals will be at the very end of the year.
And for the investor, is it pretty good going forward?
Well, yeah, I would be much more bullish than bearish because anything bad that has happened to the automobile business has already happened.
All right, John Casesa, managing partner, Casesa & Company, joining us here to talk autos. Always good to have you on, John. Thanks so much.
Mark.
Appreciate it.